Okay, good morning. Just really quickly, a couple of um, brief things that we're going to go over here is um, we're going to define an uptrend, a downtrend, and a consolidated market. When you shouldn't trade. Obviously, you can see that right here we have an uptrend. Here we have consolidation, and here we have a downtrend. So, this we like to trade our system in definite trends. Trend is our friend. Consolidation is not. Plain and simple. If we look at a consolidating market, we've been noticing lately is that when it starts to consolidate for more than 2 or 3 6 or 8 bars, and it starts to consolidate and all the MAs are all facing straight across, then we know that we're in more of a consolidation area, and we want to kind of wait until we get a breakout from one of our fractal areas, like from the Ames box area here. So if the MAs are all going sideways or starting to get tighter together, sit on your hands, just relax. Don't worry. There's lots of opportunity of uptrends and downtrends to come. And that really also depends on the time of day too. There are, obviously you don't trade after lunch. New York, I mean, unless you want to sit there and with your hands and twiddle your thumbs. And we try not to trade. We find that the best time to trade this system is anywhere from Tokyo close to London close. It seems to have the most volatility, the most movement, and there are a couple of periods that we've noticed in that time frame as well. If we can, I'm going to go back here a little bit here. And of course, on this chart, it doesn't really show it, but about an hour and a half or so into, well, right here, about an hour and a half or so into Tokyo close, or after Tokyo close, there is a small section of time that does consolidate. Maybe that's London lunch. I'm presuming, or so. And but we again, the trend is our friend. We don't really want to trade when the moving averages are moving sideways. If they're moving in a downward direction, that's great. If they're moving in an upward direction, that's great too. So, because we don't care which direction it's going, as long as it's going up or down. We're not here to take the breakouts of trends, because we don't see them until they've already kind of broke out of these areas here. So I mean, you can draw yourself a line right here in the sand. Oops. Oh, I put that in the wrong spot. I'm going to get rid of that. If you draw yourself a line from here to here, let's move this line up a little bit. You can see that this is really not a huge. It's a 21 pip area, but when you're looking at moves, you got a signal here. You really only have. You may have the opportunity to get 4 here, but there's no real. There's no real movement here. Even right here. You get lucky and you grab this one here, which is beautiful, but you don't know. You don't know if it's going to go back up here, and you're going to be sitting on your hands for 2 or 3 or 4 hours. stuck in a trade, and we don't like to be stuck in trades. I mean, I know I don't like to be stuck in trades. I've been sitting in. I sat in a trade yesterday for probably 2.5 hours, and it just, I had to keep looking at it, and it's just not. It's just not what we want to do. Our motto is to try and really get the right opportunity, get in, take your 5 to, your 3 to 5 pips. If you see that it's a pretty solid downtrend, put a trailing stop in. I've been doing trailing stops the last week with amazing results, that way I'm catching more of the move. I would grab this one here, right here, once it broke, and I'd normally take my 5 pips and be done. Well, if I had a 5 pip trailing stop on this one right here, okay, I'd have got stopped out in this one about here, but still, that's okay. So that's 5. But if you put in a trailing stop, your potential of getting most of this down to around this one here, which was a huge candle, it's pretty solid. So what I've been doing, just so I share a little bit what I do, is I'll put a 5 pip trailing stop on, and when it goes to 10 or 12, I'll increase that trailing stop to to 7 or to 10, because again, I'm willing to let it go back that 10 to give me. I'll still get my as long as I get my 3 or 5, I'm happy. But if I can kind of deal away with, let's see, that candle was 7, that candle was 6. So if depending on how the candle was built, we may have been we would have been stopped out on this one. I'm presuming we would have been gone up. Well, no, we may not have. If it had done the upswing first, we wouldn't have been stopped out. But you're in this one now for the ride for 35 pips. You get stopped out with a 10 pip trailing stop. That's 25 pips. That's a perfect day. And I had one of those yesterday. I had actually a few of those yesterday that I took advantage of. So trend is your friend. Consolidation, sit on your hands. I'm going to go over the indicators real quick. All right, we have our signaled arrowed indicator here. Again, once it breaks our trend line, and the very next candle breaks that previous candle, we're in the trade in that direction. And but the trend has to be but the MAs have to be in line for a trend trade. So basically here I have the 200, the 40, the 30, and the 10. They're all in line. So and they're all opening up. I'm looking over here and I see that they're all opening up a little bit more. So that's kind of giving me an idea that we might be looking to go into a downtrend. It doesn't always happen, but it's something to keep in your mind. It did break the lower fractals. It did break down on the fractals, and then boom, this candle broke the bottom of this fractal here, the Ames box. So the clues are there saying that this is heading downwards for a little while. And then we hop in and grab a few trades. So we have our arrowed trades, which are solid. I mean, they're solid. If they're in a trend, they're solid. Over here in a sideways market, they're good, but you have to wait. And just hope that the trend continues, especially if you're taking them in a if you're taking them to go down in this trend. and you'll grab a few in here, but you'll be sitting on pins and needles trying to grab 2 or 3 pips, not knowing, oh, it's going to go 6 against you before it comes back towards you. You'll get stopped out more often in a consolidating market than you will otherwise. Pardon me. So when we take this trade right here, we're looking for our stop loss to be at the top of the next swing high, which would be about 16 pips. Now that might not be. Some people might not have that appetite. They might want to go less. You can set it to the top of the 30 or the top of the channel. If you see a pivot or a channel marker, you can set it to the top of the 50, which is 11 pips right over here. So you just set it a little bit above it because big numbers are our friends as well, and if it's going to go back up, likelihood it will bounce off that 50. So the 50 is I gotta have to draw the line for the 50 because I can't get it to go back this far. So okay, it's right there. Oh, actually I was going up higher, sorry. All right, so you can see here, it bounced off the 50, bounced off the 50, bounced off the 50, bounced off, so the 50 holds a lot of weight for support and resistance. 25s hold a lot of weight for support and resistance. Any big numbers hold a lot of weight for. So you can set on this trade here. You could set your stop loss to there, which is about 12 pips. And hopefully it goes in your favor. The other pardon me. The other signal we like to use is inside and outside bars. An inside bar is a very, very powerful bar as well, especially if it is with trend. And let me explain that, because I mean, even though this is trend here, this candle is actually not with trend. This blue one way down here in the bottom, it's a counter trend. It's a counter trend bar. I have noticed that bars that are closed with trend, so if you've got a downtrend and you get a red inside bar, it's a very solid bar. Same thing with the outside bars. Now, I'm not going to say that the inside and outside bars that are the opposite color aren't good, because they are, but I've just noticed that the inside bars that are with the same color do have a lot of weight, and also look at pin bars and what kind of bar is it inside the inside and outside bar, because that holds a lot of they hold a lot of weight as to telling you exactly what the market's going to do. So I think that's it for what I really want to cover for inside and outside bars and for trend. I want to talk about a lot more today about our oscillators that we've added over the last week or two, and we have got a lot more confirmation. So we're looking for confirmation on our trades. The more confirmation, the better the trade, obviously. So when we're looking at this trade right here as an example, all right, well, let's draw, I'm going to draw a line here. All right. All right, so we have an arrow here, we have a break here. What we have down here as an example is that we, let me move this over one. We have our regular stochastics down here. It's a colored stochastics that we've that we're using, and it has the 833 on it. You can use 1033. 1033 I like as well, but 833 has been our basically our flag stock mark, which is normal for the whole market. And you see here is that we have a stock that has turned red in a downward direction. We have a crossover here at the same candle. So we wait for the break of the next candle. So now we have confirmation here. And we have this MACD trend line oscillator. It's called the thingy. And if you're in our members lounge, you will get this. You will get the thingy. And we have confirmation on the thingy as well. So we have arrow. We have break. Okay, we have confirmation times 2 down here, and we're in the we're in the trade, and the trade is a good trade. So ideally we want the stochastics to be up in overbought and oversold territory to take those trades. And we want confirmation on the thingy to make sure that it's given all the right clues. And the other clue here is that obviously everything is moving away from the higher time frames. So we know we're in a downtrend. We're not hitting a flat wall. So that's and we have steps. So we have like 5 or 6 really solid indications to take this trade short. Like this is, and boom, away you go. Let's look for another one here. All right. Again, there's one right here. Okay, we don't know about this consolidation yet, so we're still looking at all of this. We're in pretty good condition here. Downtrend. Let's look for a big number here. 200. Okay, we've bounced off the 200 here. All right, which is again a solid line. We have confirmation down here. So we have an arrow here. We have a break. All right. We have confirmation on our stochastics here in a downward trend. We have a crossover here. Okay. We do not have a thingy trade here. So this thingy is telling us that okay, we have 3 out of 4. You want to take the opportunity and the chance to take this trade. It's it's there, but not everything is in line. So if everything is not in line, it should be in the back of your mind a no trade. And then as we're looking, we see now into the future, because we can at this point, that this was correct. This thingy told us to stay out of the trade. And we would have been in that trade half an hour before we got what, 5, 10, 15, 20, 30 minutes before we got our 3 to 5 pips. However, we don't know, because at that point in time when we're looking at it now, I move this over. I move it over to right here. We see consolidation for at least 7 or 8 candles. We should be sitting on our hands right now, waiting to see which direction the market's going to go, because we see that the 10 is straight across. We see that the 10 and the 30 are tightening up. It's a successful area. However, it's a more likelihood that you may or may not get the trade. So basically, it's not in your favor to take a trade in consolidation. So again, sorry. Pardon me. Let me move over a little bit more. Anybody have any questions? Anybody? Oh, come on. All right. So we have one here. All right. Again, we have a so this would have been a good entry, but we don't know that. We really don't know that because we've had a lot of consolidation. Would I have probably taken the trade? Unfortunately, I probably would have, because I like to take lots of trades and I like to see them, and I gotta slap myself in the hands every once in a while, going, sit down, sit on your hands, or go do something else until you see a definite breakout. But that's discipline, and sometimes I don't have all that discipline because I'm human. So here we have the stock is okay. We have a signal here to go north. Okay, we have the MAs are all tightening up here. We have a let me bring this one down. Where are you? 50. All right, so we have big numbers here, 20, and where are we? We've come across, we've bounced off this big number here. Okay, it's going back into consolidation, so that tells me no, it's a no trade. It should tell me that anyways. But I have a crossover here. I have a crossover. My stochastic is turned color. I got a crossover here. I have a change of color on the thingy. I should be in that. I should take that trade, or should I? Because I mean, really, a lot of the things aren't in my favor here on this trade. It's a downtrend. I mean, if you're doing counter trend trading, this would have been a quick in and out for, well, 3 pips is all you would have got out of it until 45 minutes later. So, consolidation again is really not your friend for getting in and getting out quick. The longer my opinion, the longer you're in the trade, the more risk you're at on that trade, especially if you're scalping. If you're wanting to do long-term trend trading, or you want to do some other other forms, day trading, or you want to do intraday or whatever, you want to do Fibonacci trading, that could all be a different system here. But when you're scalping, you don't want to be sitting in a trade for an hour, 2 hours, 3 hours, because you don't know. All right, and they have the tendency of biting you. Okay, so theoretically that should be a no trade unless you are doing counter trend trading, which we really haven't covered a lot of counter trend trading in here. And you're in, you're out. Be quick about it. But make sure if you're going to do that, make sure that you've got a bounce here. Make sure that you've got a crossing here. Make sure that everything's in the right direction. Make sure that your MAs are going sideways or going up a little bit. We talked in the previous videos. We've talked about looking between the two last MAs and seeing 2 or 3 last MAs and seeing which way they're going. And then open up and go to a higher time frame and say, okay, where's there more support and resistance levels? Like you have a huge, you have a huge level right here. You have a lot of it in there, so there's a lot of consolidation. So, if you need to take the trade, you take the trade, but don't take it if you don't need to, because you don't need to worry. All right, let's move over a little. All right. So here we have an entry. Again, we're not out of consolidation yet. MAs are really tight in here. All right. But we see now everything is starting to point upwards a little bit. The 40 is starting to flatten out, and so is the 200 is starting to flatten out. So if I'm to look at this trade here for an example, all right, and again I'm going to go back down to my thingy and my stack and a stock, and I'm going to look at that. Here I got an inside bar, an outside bar, a pullback here, and then I got a break of that pullback going north. I'm in the wiggle here, so I shouldn't be taking this trade because I'm in the wiggle. We're 5, 10, so we're in the wiggle. There's where we should be entering this trade as a top of the hour trade. But I look down here and I see also, so I have an arrow. I have a break. My MAs are all moving up. I've got change of direction here. I've got change of stack. It's crossed over the 50. My thingy has changed color. To me, this is, even though it's in the wiggle, this is a valid trade. This to me is a valid, because it hasn't bounced off the 50 and come back down. It's starting to go north. So I would enter into this trade. Most definitely, I would enter into this trade. And away I would go with it. I would probably just, again, do the same thing, 3 to 5 pips or trailing stop until I got, because remember, the 1030 is really what we're trading. The 200 and the 40 or whatever other moving averages you want to use, they're there just to help you establish what is the trend, where is it going. And a lot of times you'll see that when something comes up to a 200 or a 40, it'll stop at it, and it'll try to bounce through it one way or the other. But the 200 is, it kind of stops at it. It says, oh, I don't know if I want to break through that and start going in the other direction yet. So I'll move this over a little bit here. All right, we have an inside bar here. We don't have a break of it here. We do have a break of it here, but our stock is saying it's been overbought. We have a crossover here, and our thingy is still blue. It hasn't changed color. It won't actually change color until the very next candle. It will repaint during that candle, okay, just so everybody knows. So does the stock, just like the stock does. It will repaint during the candle. So if it's a 5-minute candle, you'll have to wait till the close of the candle to find out what direction these were painted in. So here you are, inside bar. This is no trade. All right. No trade. We're getting close to the 200. Again, this can be very simply a good counter trend trade. We have a inside bar uptrend. We have a pullback. We have a break of that pullback. This is a trade that Roger loves, and boom, he's in. He'd be in on this candle here, though. So I guess I don't know if he'd be in on this one or not. I can't really say, but from what he's discussed with me, he would normally sometimes take it as soon as it broke this candle because it's an inside bar, and then he would take his 3 to 5 pips and be happy. But we also see that all the MAs are opening up here. All right, we're looking for. Now we're sitting and we're waiting for, more confirmation. Here we have a confirmation on an inside bar, outside bar. Inside bars and wiggles are very powerful. So we know we have an uptrend. We know we've crossed over a lot. Our MAs are gathering. And watch here. See what's happening here is that we got our bar here. We got a break of it here. Down here, we have a crossover of the stock. It's turned blue. It's crossed over. Okay, we don't have a confirmation on the thing yet, but the very next candle we do. So 3 out of 4 is valid. 4 out of 4 on validation is the best, but 3 out of 4, 3 out of 5 for validation, are still good probable trades. So. Everybody's like, nobody's talking, nobody's asking me any questions. Hopefully I'm doing an okay job here, I don't know. All right, so we have a counter trend trade here. So let's go back a little ways here. Oops. Oh, what did I just do? Oh. I don't know what the heck that. Oh, that's that chat window. Sorry, just give me a second here. I didn't realize. There we are. All right, so let's start right here. Well, let's see how good we are. So we're at Tokyo close here. Okay, I'm not going to take this one here because I already know what it's doing. But we have a crossover here. So we're gonna look for this and watch this and see what happens. We have a crossover of our stochastics up here, but our thingy is still blue. We really don't have any trading opportunities yet. I mean, you could have taken this one back here and you're good to go. Bounce off the 200 here. I really am been doing a lot of 200 bounce trades lately as well, where if it comes down to the 200 and stops at the 200, I'll take a reversal trade. Okay. Sorry, Lewis is saying, oh, Lou, you can talk, okay? Please.
Okay. I didn't know that. I just wanted to know, for the sake of the new guys there, maybe you could talk about whether you consider a change in the market direction valid when the 10 crosses the 30 to the other side. Well, by looking at this picture in front of me, I'd have to say no.
Again, depending on consolidation, right? I mean, if the 10 crosses the 30, it is a yes. It is a valid. It is a suggestion of a trend change. However, if you look in your rearview mirror and you see some consolidation, whether it's changed over or not, you're going to want to wait for it to break out of, like this channel that you see here. If you see backwards behind you that you've got a pretty 3 or 4 spots where it just can't break above it, and then you've got a crossover below that spot, chances are that it might just go back to that spot and come back down again. It becomes a riskier trade, in my opinion. Did I answer your question?
Yeah.
Okay.
And that's for the the new people that are here.
Right. Okay. All right. Well, yeah. So I mean, the crossover is what we're really. I mean, not the crossover, but the MAs pointing in the right direction is really what we're looking for. And they have to be in line. The 10 has to be on an uptrend. The 10 has to be above the 30. The 30 above. Well, the 30 doesn't have to be above the 200 and so on and so forth, because obviously if that's the case, you might not be trading very often, depending on how the market, where the 200 is. When you get closer and closer and closer to the 200, that's when you need to take more caution as to whether or not you're going to trade towards the 200 or away from the 200. So if it's like 50 pips or 60 pips away from the 200, like down here, we're only 10 pips away from the 200. I'd be a little bit more leery. Like over here we're 15 pips away from the 200. When you get into being 3 or 4 or 5 pips away from the 200, just do yourself a favor and sit on your hands. Really, until you really master the whole thing, then that's really all I would do. But this is my opinion, guys. You guys can trade it the way you're going to want it, the way you guys see it. And if you have another, and if it works for you, then you do it, okay? But this is just the stuff that I see. So let's move on here. Okay, so we're sitting here in all this overbought territory, we're kicking ourselves in the backside for not taking some of these trades. We would have taken this trade here because it was a inside bar. Again, remember I said inside bars and outside bars are very powerful. We had an inside bar here with trend. Well, it was actually a counter trend bar, but it's still with trend, so it's still a solid trade. We're in that one for a few pips. Again, we know we now have a definite change of direction here. Everything is going up. The 200 is way behind us now, and our MAs are going in the right direction. So we're now looking for. We're either looking for trend trades in direction, or we're looking for a crossover of our trend at this point in time. So we now have another outside bar here. We have a break of that outside bar. Boom, we're in the trade. Okay, here we have a down signal. Okay, now let's look at this signal for 2 seconds. It's a counter trend trade opportunity. So what we're looking for here in this counter trend, because like I said, we didn't discuss it a lot, so I'll discuss some of it right now, is we're looking for a break of the 10. We want to make sure that our MAs are fairly wide apart, a good 10 pips or so apart or better. The farther they are apart, the better it is they are. So this right now, MA is roughly 10 apart. All right. We have confirmation down here. We have a thingy. We have the thingy going down. We have a cross of the 10. Sorry, we have a cross of the stochastics, and our stochastics is red. So we have 1 clue, 2 clues, 3 clues right here. We're really far away from the 200. We're 22 pips away from the 200. There's an opportunity here for a counter trend. We have an inside bar here. It broke below the inside bar. So let's if the next candle breaks below this, we should be in that trade as a counter trend trade. Okay, and it didn't do so. Nor did the next one. Nor did the next one. So now it's in no trade. This next candle, remember we like to only go at least 3 candles. Don't go any more than 3. Yeah, I mean, again, personal preference, personal opinion of, you know, trading this system. The further away it is from signal candle, the weaker the chances are that it's going to be successful. All right, so, and okay, so now we have another up signal here. We had an up signal here. We had an outside bar here. We have a signal on that outside bar. We have our thingy is still showing short. It's kind of leveling out at the 50 though, so it might just keep going. It might turn blue. We don't know yet. We don't have confirmation on it. We do have confirmation across over the stochastics, and you know, personally, I'm in that trade. I'm in that trade going north, no problem. I got my 3 right there. You know, as soon as I take the trade, guys, I automatically throw on a 3 pip trailing stop. So if it hit my 3 and then came back to 0, I didn't lose anything. All right, I didn't lose anything. I, you know, may have given a cent or 2 cents or to the broker, and we have now another confirmation we have on this trade because it came back a little bit. We have another inside bar here. Our MA is still moving north. All our MAs are moving north. Our stochastics moving north. We're getting a crossing here, and you know, we're in that trade. We've taken that trade. We've taken our 3 to 5, hopefully. You know, and we're out. Now we have a potential issue here on this candle here, because this candle has got an outside bar here. MA is sideways. Looks like it's coming down a little bit. 7, so it's coming closer to the 30. We have a crossing down here of the 10, or sorry, the stochastic. But boom, you know, we're in. We're out of that trade. You know, we're happy. Okay, we have a down arrow here. Again, let's try the same counter trend trade that we got here. Let's look for all our clues stacked. We have a you know, we have an outside bar. We have a lower high, lower high, lower high. Thank you, Lou. Lower high. Okay. We have an arrow going down. If you look, our moving average is painted down a little bit lower. We're moving closer to it. We have a crossing here on the stochastics to the downward direction. We have a confirmation on the thingy, so we got 1, 2, an arrow is 3 confirmations. We're looking now for the break of that candle. We have the break of that candle. We should be in that trade as a counter trend trade only. But now our stop on this trade is going to be 16 pips. 18 pips. So it's going to be up here at the top of this box. And we're probably going to get stopped out on this one. Yeah, we got stopped out on this trade. All right. They don't all work, but now let's back this up a little bit here. All right. This would be our clue to get out of the trade right here. When this thingy and the stock change direction, change color, and change direction, we should be looking to cut our losses on this trade at 8 instead of waiting the whole direction. Okay, we noticed that over the last few days as well. I know it's a lot more information here, so that would have been our signal to get out of this trade. Pardon me.
Dave, can I offer one note on the counter trends?
Yeah.
When I trade this, I do take the occasional counter trend, but I'm always looking for the highest probability trade. But the higher probability trade on a counter trend, you can't see my mouse, can you?
No.
Okay.
Hang on, I can see if I think I can give you control here. Let me give me 1 second.
Well, no, I don't want to mess up the recording. But just you see where London closes in the middle of the screen. You see the vertical line, London close? Yeah. And you see Tokyo close.
Yes.
Okay. Now I just want to talk about that push up, the pullback, and then the push up to the highs in that area.
Okay.
In between London open and Tokyo close.
Sure.
See that cluster of highs right in the middle? If you could put your mouse on it. Right. Now you go back to the last prior swing high. Right. No, swing high, the swing high. Right there. What I want you to notice is that the thingy gives you divergence there, and so does the stochastic. Because price went to a higher point, but the oscillators went to a lower point. That's usually a very, very good sign to take a divergence trade if you want a counter trend.
Okay.
And that's a good confirmation for a counter trend. It doesn't happen all the time, but it's a very high probability when it does.
Okay.
So you see that prices went higher, but the oscillator at those same two peaks went lower. So that's a clue for counter trend trades for me.
Okay. I see that. Okay, thank you. All right. Oh. Yeah. All right. So let's just keep going here. All right. So, well, here's a bounce trade off the 200. You know, we've come back. We've taken this trade here, hopefully. We have a bounce off the 200, and we're heading back in the northern direction here. However, I mean, yeah. All right, so we have, again, this stock is high over here, crossing down. We have a downward arrow. Yeah, the 200 is pretty close here, so you know, it's a quick get in, get out type trade if you take it. It didn't break, so and we're now out of that trade, and we should be done now for the day here in and around this area. So anybody with any questions? I'll get better at doing this because I've now just added talking about this down here, so I'm sure there's a ton of questions, and I probably didn't explain it quite well enough, but hopefully on our next my next webinar I'll be able to explain it a little bit better. The mics are open if anybody wants to ask any questions.
I'll make a couple of comments, if it's okay, Dave.
Sure.
The system is really, really robust. It can give you a lot of decent trades. If you're new at it, I would suggest you stick with the core, simplest grade A trades, and those would be the inside bars, excuse me, outside bars, in the direction of in this particular chart, the 10 and the 30 are both rising. So if you're new, concentrate on taking those signals when the 10 and 30 are rising. Take your signal arrows. Okay, in this case, they would be the blue arrows. And then take your breaks of the inside bar as long as the 10 and 30 are rising. So if you're new to it, that's a very, very simple way to get a feel for it without driving yourself nuts, because when you're looking at 6 or 7 pairs, these guys are very professional at what they do, and they're accustomed to looking for the signals. So they can jump from pair to pair to pair in a matter of a blink of an eye and spot a lot of trades. When you're new to it, it can seem a bit overwhelming. So I would suggest, if you're brand new, try to stick with a couple of pairs and try to stay with the trend, which would be, in an uptrend, you want the 10 above the 30, or in this case, the red line above the yellow line. And you'd like to take your signal arrows or your inside-outside bar breaks in that direction.
Right.
And then as you get better at it, you'll be able to jump from pair to pair to pair.
Yeah, exactly. I agree. I'm sorry. Thank you for pointing that out, Lou. I do agree. Make sure that you only trade 2 or 3 pairs. I would even just trade 1 pair until you get it, and only take the trend trades. And take three pips. Take 3 pips and get out. Take 3 pips and get out. Take 3 pips and get out. Don't worry about the trailing stops. Don't worry about just get to see the charts. Get to understand exactly how it works. I see Larry put up his hand. Did you want to say something, Larry?
Can you hear me?
Yeah, I opened the mic for you.
Oh, I didn't realize it. Sorry I got in late. I have no excuse.
Yeah.
No, I raised my hand by accident, but if you have new people here, I'll just say somebody who's only been trading this 2 months, I think it's the best thing I've ever seen for scalping.
Thank you. Thank you.
No problem.
Okay. Yeah. So we just want to make sure that, and we're here to help you. We will work with you one-on-one. We will, if you have charts that you want to go over, we'll do we'll go over them with you. If you have charts you want to send to us with pictures, we'll mark them up and send them back to you. If you want to talk to us on Skype, we'll communicate with you one-on-one, and we'll make sure that you're not left out in the middle of the field when it comes to trading this system. I mean, our success is your success. If you guys are successful, that makes us feel good. So. I mean, it's very simple. I mean, we can, it's just follow the rules. The rules are very simple. In a trend trade, you take the arrowed breaks of the trend as long as the trend is in an upward trend. If it's an upward trend you're looking at, you take the blue arrows, like Lou was mentioning there. You take the inside and outside bars, and you make sure that that everything is in line. And if it's not in line, don't take the trade. Plain and simple. Plain. And then once you see 3 or 4 or 5, and back test. Go back a few days and push the F12 key if you're using MT4. And that gives you 1 candle at a time, and mark it on a piece of paper saying, okay, I took that trade, And are everything in order? Is the 10 above the 30? Is in an uptrend? Do I have an arrowed signal? Do I have an inside bar? How far is it away from a big number or a support and resistance level? Mark all those things down, and if out of the if out of those you get 5 or 6 of them that are all confirmation, mark it down and mark it and take the trade. Even paper trade it. Just paper trade for sure. Demo. Do not try and do this on a live account if you're brand new until you for at least a month or two. And talk to us, and we'll help you. We'll help you figure it out and get it. There's 3 or 4 people that we've got in our room that have really excelled at this. I think Sean's one of them. I think he's now left, unfortunately. But we've worked with Sean for quite a while, and Sean, the light bulb came on, and Sean's making some good pips. Larry's been a trader for a lot of years, and it was easier for him to grab this than most, because he's a scalper, and so he was open to ideas and not worried about other baggage. And actually, that's the other thing I want to really touch on. I wasn't very successful with this for a long time, and the reason why is because I looked at this and I kept adding other things to it. Okay, you can't do that. You can't use this with a million other things, and you got 50 other lines, charts, and things on your charts. You kind of have to try and put all of that stuff aside, if you can, basically, and just follow the simple rules, and you'll see after a couple of weeks of trying it, you'll see that it will be successful for you, and it's very simple. It's very simple system. Okay, anybody have any other comments or questions? Going.
Do you guys still use the big round numbers?
Yeah. Hey, Tony. Yes, the big numbers are very important. Yeah, I did touch on the big numbers a little bit, showing that they're very important for support and resistance. The 200, the zeros, the 50s, 75, 25s. Normally the 50s and the zeros are they'll retrace at them. And the 25s and 75s, they'll still retrace at those, but more of those get broke through than on the 50s and the 100s, or 50s and the zeros. But we do look for all support. We have support and resistance. We look for pivot points, and we watch big numbers. Yes. Anybody else? All right. Well, I'm going to cut this short because my wife has told me I have to take my kids to a reptile show this morning. So, and she almost kicked me out of the house last night because I said I was doing this morning. But
life after charts.
Life after charts, exactly. Okay, so guys, I'm going to, unless anybody else has any other comments or questions, I'm going to go ahead.
All right. The only comment I'll make is if you're new, try to stick with just 1 or 2 pairs and try to take the grade A entries until you get accustomed to it. That will help you out a lot. I've been trading for a while and I do okay. But when I went to learn this, I realized I was trying to copy guys that had a lot of experience with it, and I was scooping myself up. So I took 2 pairs and only focused on those 2 pairs, and it really escalated how quickly I adapted to the system. So I would strongly suggest that, because if an experienced trader has trouble grabbing it because of the speed, I can easily understand how someone new to scalping or new to this system will have issues also. So keep it simple, take the grade A trades, stay with the trend, and then as time goes on, you'll learn the little subtleties and nuances. But the system does work.
Right on. Thanks. Thanks. Okay, guys. Anybody else? This is the...
Would you call that the Brooklyn seal of approval?
It's Staten Island. Please don't move him.
Yeah.
Okay. All right. I'm gonna end the record. I'm gonna thank you guys. I'm gonna end the recording now. If anybody wants to stick around for a few minutes, hang on. I'm gonna end the recording.